Today we're going to talk ETF investing. What is it? Why is it so great? And how do you actually do it? ETFs are exchange-traded funds. They are very similar to mutual funds, which a lot of people have heard of mutual funds, and we'll get into some of the details of funds in today's video. But really, I want to unpack why ETF investing and how ETF investing can be so powerful to help you build a lot of wealth through the stock market. Let's get into some basics of investing in the stock market. So when people are talking about funds, they're typically talking about either mutual funds or exchange traded funds, ETFs. There are a lot of stocks to invest in the stock market. We have all of these names that you're probably very familiar with, plus thousands and thousands more stocks to be able to invest in. So it can get a bit overwhelming as a new investor to the stock market to try to figure out, well, I want to invest in the stock market, but how do I decide what stocks to own? There's thousands of them. And getting to the bottom of that point, you're going to find that's why funds are so popular, because they make it so easy to invest in stocks. Okay, so essentially we have these stock indices. There are multiple different indices out there, popular ones, not so well-known ones, right? And to understand how these indices work, they are essentially measuring a cohort of stocks that exist out there. And that's what's giving us this one stock index that is measuring sometimes thousands of stocks. But for the S&P 500, for example, which is a popular index, that's going to be measuring 500 stocks to make up this S&P 500 stock index to give us this one price. There are multiple stock indices, like I mentioned, but here are the most popular ones. And I'm going to mention one that I don't have on this list. So the S&P 500, which I've already kind of hinted at a few times so far, it's the most useful stock index out there in terms of US stocks. The reason for this is because it's got 500 stocks in it, so it's one of the more diversified indices because it's got more positions in it than others. And it also measures the largest companies by their size and invests in essentially the largest companies at the top and having the largest holdings of those companies. And then all of the other companies are going to have smaller holdings because they're smaller companies. We call that market cap weighted. So essentially, if the really big, really great companies like your big tech companies, Google, Microsoft, Apple, if they do really well, this index is going to do very well because it weights those companies more. The Dow Jones Industrial Average, the Dow, it's the most known stock index. When you're listening to CNBC or to, whatever financial news channel, you may have heard somebody mention it. It definitely is not as useful as the S&P 500 because it has a lot less companies in it. Now, one that I should have on here is the NASDAQ 100. The NASDAQ 100, it measures, you guessed it, around 100 companies. And it's going to be very similar in terms of the S&P 500. It has a lot of the same companies in it. It's just weighted a little differently. And obviously the S&P has more companies in it, so it's more diversified. And then the Russell 2000, which measures the smaller cap companies. So the S&P, the Dow, the NASDAQ, these are all going to have large corporations in them. And the Russell is going to measure our smaller corporations. Let's talk about the process of actually buying ETFs or investing, right? So when we think about an exchange traded fund or an ETF, I want you to think about it as buying a box of stocks. So remember I mentioned the stock index. You might be wondering, how do you actually invest in that? And this is how. So exchange traded funds and mutual funds as well, what they'll do is they have fund managers that buy the same exact stocks that are in that same index. So you're buying one thing that's going to house all of these different stocks in it that you're going to be able to be invested in. And it's going to basically mimic the same companies that are in the stock index within your ETF, aka an index fund. Now, not all ETFs are index funds. An index fund essentially just means it's a fund that's tracking an index. It's trying to actually have the same exact positions, the same exact weightings as the index. We call that an index fund. Not every fund is going to be an index fund. It's only deemed an index fund if it's actually tracking the index and has the same underlying holdings as the major indices. So keep that in mind. There are funds that have mixes and matches of stocks that have nothing to do with an index. But people choose to invest in index funds because they're easy. They're well-known indices that people, want to be invested in. But there are many different types of funds that don't necessarily follow that same guideline of being an index fund. So let's talk about the process of getting invested in the stock market via these exchange traded funds. So what you do is you take your money to a brokerage firm. Vanguard, Fidelity, Charles Schwab, Interactive Brokers, these are all very popular brokerages. Now, the type of account you open to invest in, whether it's an IRA or a 401k or a regular brokerage account, that's a whole different subject. I cover all of that in my Wealth Master Plan training program for anyone that wants to get into those nitty-gritty details. So the type of account is going to vary, but just know that you are going to these brokerage firms, you're opening an account of some type, one of the many types, and you are getting invested and exchanging that cash to buy ETFs. So again, you're buying one thing. You're buying one ticker. We call it a ticker, and I'll explain that in a second. But you're buying one thing that's getting you invested in all of these different companies, and it's great. So let's move over to Y charts so we can put some of this together. This is an S&P 500 index fund ETF. So it's the ticker. How we identify different stocks in the stock market, different funds, we identify them by tickers, which you can see all of these tickers. You can call it a symbol, you can call it a ticker. So SPY, this is not advice to buy this. I'm just trying to teach you how this works. SPY is one of the most popular S&P 500 index fund ETFs out there. There are others, but this is the one that everybody talks about. First of all, we know that this is an S&P 500, index fund because it says it right in the name. We know that this is tracking the S&P 500 and it's an ETF. Great. So when we look at the holdings, this is where it all starts to make sense when I'm talking about you're buying that box of stocks. Envision SPY, which is what you're going to be buying, one thing. This is the only thing, if you're going to just buy this, you're buying SPY and it's giving you exposure to 503 stocks. Okay. So this is where you're going to see like the top holdings of the ETF, and you're going to see all the things that are in it, and it's super fun to look at. And you recognize companies, and it's like, oh, okay, I'm going to own a piece of Apple, Nvidia, Microsoft. And that's where investing can get pretty exciting. So again, this is just one example of a stock index fund, okay, that is tracking the S&P 500 index, and you're just buying the one fund, and it's giving you all this exposure to all of these stocks. So that's what makes it super easy to do. You go to your brokerage, you buy your ETF, boom, you've got exposure to hundreds of stocks. So let's talk about becoming a lazy millionaire via exchange traded funds that you can purchase. I love this reference because truly, if you break down the numbers, you can understand how powerful this can be. Now, I need to preface this with buying one thing in the portfolio may or may not work. You need to consult a financial advisor because everybody has a different situation, different needs. So I just want to make sure that's clear before getting into this example. But becoming a lazy millionaire, this is what it could look like. Hypothetically, if you took $875 a month and you invested it every single month for 30 years and it compounded returns of 7%, you would get your millionaire status. So if you have a lot of time on your hands and you're younger, now is the time to make sure that you understand what you are doing and getting invested, because that money can compound to be hundreds of thousands of dollars in retirement that you would have never had if you didn't start now. So, of course, not everybody has $875 of extra cash to invest monthly, but just know, maybe it's not $1 million that you end up getting in retirement, but whatever you can invest will compound and it will benefit you over the long run, and it's better than not starting. Now, let me break down this 7% return projection. It is lower than the actual annualized returns of the S&P 500 over time. Now, just take a look. You're probably understanding this a lot better, right? You see this S&P 500 chart. This is what we're talking about when we're saying, what has the stock market done? What is the stock market doing? Measured by the S&P 500. So now you understand what that means, and there's all those stocks behind it. But the annualized return of the S&P 500 is roughly 10.5%. So you might be wondering, well, Nikki, why did you use 7%? Not everybody is going to want to be 100% in stocks. Yes, if you compounded at 10.5%, you'd have to put less money in. You'd get there maybe a little quicker. But just so you do know, the actual annualized returns of the S&P 500 are much higher than 7%. So I've actually built an ETF guide for anybody that wants to start investing in ETFs, but they're not sure which ETFs are out there, what they should be looking at. What I've done is I've compiled all of the different ETFs by the major categories. So stock ETFs via growth, value ETFs, international ETFs, bonds, Bitcoin ETFs, just the list goes on and on. So all of the different major categories of ETFs that exist out there, I pulled the top ones by assets under management, so how large they are, and expense ratios, which I talk about expense ratios in my training programs. It's a really important topic. And so this is just something that you would get access to within any of my training programs that entail investing, my ETF program, my Wealth Master Plan program. The ETF guide is going to be included in those two programs. So it's a really helpful thing to have if you're trying to build an ETF portfolio from scratch. Of course, this is not a comprehensive masterclass in ETFs. There's so much more to dive into. But if you want more and you're interested in really starting to build your ETF portfolio, check out the link in the description below. I have all the resources you need, even a ETF investing course dedicated just to ETF investing. I've got you covered. If you liked this video and found it helpful, if you learned something new, please hit the like button for me. It's really helpful. I want other people to find my content so that they can learn how to invest from an actual investment advisor and certified financial planner, me. Subscribe if you're not subscribed, and I will see you next time.